Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for January 25th, 2017. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. The previous session we closed at new highs here, pushing beyond the previous month's high. That's been a level we've been watching closely. This previous month's high, I've mentioned time and again how bears have been defending that area, but every time price pushes below key support here, they've been getting paid less and less as bulls come in to defend. And as I mentioned before, this type of ascending pattern here usually breaks to the upside as these bears that have come in to defend start to jump ship because they're not getting paid. So above 2280 was our key there, that beyond that level could start to squeeze into the next upside key level. I mentioned 2296 is the next upside zone, as that is the 25% expansion of the previous month's range. We only got a few more days to reach that target, but that could be the next upside level here if price can continue to hold above the 2272s, which is the previous month's high, 2273s. So again, I mentioned before that anytime you get price that's this tightly coiled here, there's a tendency to test both sides of the range. Obviously, given the uptrending market, it's safer to buy pullbacks right now than it is to sell back down. So the expectation right now would be that if the price fails to hold above this 2273, we rotate back against the range. Otherwise, holding that area implies more upside price discovery toward 2296. Still cautiously approaching this market because the full tilt of volume and volatility has not returned. But overall, at some point, something's got to give and we got to start seeing more rotation. The trend is still to the upside. It's still a very bullish trend. And overall, that implies more price discovery to the upside into these next key levels. Here's a look at the intraday time frame. From an intraday perspective here, you can see prices trended higher throughout the overnight session. The previous session was quite a push higher, and then you can see that late in the day, some profit taking occurred. But overall, the trend is still up. You can see a higher value relationship on the pivot range. So pullbacks are to be bought at least short term until proven otherwise. But again, we got to continue to see if price can hold above 2273s on the whole. If so, we could be looking at that next upside level at 2296s, which is a little bit higher. Let's take a look here at crude oil. Here's a look at crude. We'll go to the higher time frame for a moment. With regards to crude, you can see that the price range has significantly compressed. And in the previous session here, we were working on an inside day for much of the session, actually a double inside day. But here, price tried to hold above the previous session's high and quickly rejected and pushed back down. So you can see we've got a very, very tightly coiled range here in crude. Today we do have the Eia Report, so we have some catalyst to look forward to. As I mentioned before, this type of price behavior here, where price is just kind of holding below the previous month's close and you see a very tightly coiled pattern here, that tends to imply strength to come. So above 54s could see a large squeeze into 55.5 and higher. So we're going to watch for that. But again, any pullback could be seen as a buying opportunity. So even if price were to drop, you can see how strong these buyers have come in to defend and push this thing back up. So again, we have a very tightly coiled price action here. You know, the first breakout could be false, but again, if we get above that 54, it could be a steady squeeze to the next upside key targets. I mentioned before the next upside level here could be 57.91 and 59.5. So that could be a big time move here if all of this energy here unwinds to the upside. So again, nothing much to do here at the moment. We got to wait for EIA as well. And then again, above 54s could open up a big time squeeze to the upside. Let's drop this into the intraday time frame. On an intraday basis here, you can see we have a downtrending market short term. Right now you can see lower highs, lower lows. It's really going to take getting back above this previous close here at about 52.95s in order to get this thing pushing back toward 53.24 and 53.50. As of right now, we got a little bit of a down move going on, and so we got to continue to watch it. We're at short-term support. This area is supported about 52.60 has been defended over the last few days. And so right now that's a zone to watch for signs of rejection because that could get you back toward value. Otherwise, failing to hold this level will rotate into 52s, which has been a major point of contention for bulls. All right, let's take a look here at gold futures. Here's a look at gold. One thing we started the week with was watching the previous week's high price because you were seeing an early rejection, although it wasn't significant. It was you could see that price was clearly holding at that zone. So if I switch this to weekly here on the PivotBoss pivots, what we were talking about earlier this week was this level right here being rejected early on, and if it was going to be rejected, the implication was that we could go across the range into the previous week's low, and that would offer a buying opportunity back up. And you can see we've rotated back down quietly here, and in overnight trading we actually dropped some, getting right into 1200, and already you can see bulls have come in to defend. So this is what I mentioned before. This upward trend has been very, very steep. Every time price fails to hold below the previous session's low, you get a squeeze. It's happened time and time again across this chart. And so right now, you can see this is the previous session's low. Price drops below it and is left behind a rejection tail, and now price is right back at it or just above it. And so this could be the buying opportunity for a squeeze to new highs. And if we can push through these highs up here, you see 20 right here, evens, 1220. Pushing through that zone opens up our next upside targets. I mentioned before, 1233 and 1240 are the next upside targets for gold. So right now, this could be the buying opportunity for a squeeze into these next upside targets in the days to come. So continue to watch the previous session's close here. That's going to be, rather the previous session's low, 1206.20. Watch that level because holding above that zone by the end of the day could spark a nice squeeze into the next upside levels. Failure to hold 1195 will rotate this thing much lower. All right, let's take a look here at the NQ. The NQ saw a squeeze here. This thing has been very vertical, pushing higher. We have a rejection day below 50.40 just earlier this week, and we've seen since seen a squeeze to the upside. The previous session was very important here because you have a continuation throughout most of the day, and that midpoint of the squeeze here was beyond the previous week's high. That's very important. That's indicative of further strength, and you can see we've seen a continuation so far. The next upside targets here to watch for are much higher on a swing basis. 52.01. That's been the target we've been talking about for some time, and we're starting to make our way toward that zone. I would say any rotation into 50.80 could be a great buying opportunity for a continuation into that zone. Right now it's hard to buy at these areas, so we got to watch for signs of pullbacks at this moment. But 50.80 rather, is a very good spot here to watch for a pullback and a swing buying opportunity to the upside when that moment may come, or should it arise. Now let's take a look here at the intraday chart for the NQ. You can see a nice trending market so far, and very vertical. You have a sloping VWAP here that hasn't been tested since basically overnight. Any pullback into that area could be a great buying opportunity on first test. So right now it's rising. It's at 51.10 at the moment. So if we get a 10-handle rally, rather pullback here, we could get a very solid push back toward highs and perhaps into the next upside targets here. On basically an ADR basis, this is our 75% ADR target, and that's typically our primary target for the day. Since we are pushing higher, this has a high odds of being reached here at 51.28 with a shot to see a continuation into 51.38, which is the 100% target. So anytime you're coming out of a very narrow range or tightly compressed price action on a multiple day basis, you typically not only push to 75, but you get to that 100% target as well. So high probability targets at 51.28 today and 51.38, but again, look for the pullback into 51.10 for at least a first try at buying the dip and pushing this thing to 51.28. So we're going to see how this thing continues to push out. Obviously, 5100 has been very important. That's the previous session's close, so holding that by the end of the day will be very important for bulls. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck and trade well.